It has now been 1 year since the onset of the pandemic, and despite numerous headwinds, Phoenix multifamily has fared very well. Vacancies have compressed amid the delivery of thousands of new units and rising rents in the Phoenix market. Hi, I'm Carrick Sears, multifamily advisor with SVN Desert Commercial.
And I'm Royden Hudnall, multifamily advisor for SVN Desert Commercial. Asking rents continue their upward climb in the valley, and there's no immediate signs of slowing down. At the national level, rents have not returned to their pre-pandemic January 2020 levels, while the Phoenix market has improved 8.3% since then. Though rents vary from different locations in the valley, all of Phoenix's submarkets have improved past pre-pandemic levels.
Rent growth has increased the most in the suburban submarkets, especially West Maricopa County, with rents increasing there over 17%. The Southeast Valley, Deer Valley, West Valley, and Chandler have all boasted double-digit rent growth in that span, while rents in the Camelback submarket have only increased 3.3%. This submarket has had the slowest rent growth in the valley, but it's still above the national average.
Across the market, landlords are relying less on concessions to attract tenants to their property. Only about 17% of properties are offering concessions, which on average are 6 weeks free rent. Availabilities in the market have dropped below 4%, which is in line with pre-pandemic levels. Also, apartments.com search activity has climbed to a new high, and residents being attracted to affordability and high square footage that Phoenix has to offer. Apartment demand has also climbed in February and March and trended well above the 2017-2019 historical average.
Net absorption was very strong in the first quarter of this year and outpaced supply, which put some downward pressure on the vacancies. And the vacancy rate now rests below 5%, which is very good for the Phoenix market. Demand is strongest for affordable housing. However, the construction of Class A properties count for the majority of projects that are coming live in the next year. There's actually over 17,000 units under construction right now, and that is going to expand the market inventory by about 5%. And downtown leads the way with over 5,000 units under construction there. And that's going to expand the downtown submarket by about 15%. The renter demand has really been strongest in the Gilbert submarket due to its affordable rents, and there are currently over 1,800 rents under construction in Gilbert.
Rent growth is expected to accelerate in the coming quarters. Unwavering rent growth and single-family home price appreciation have caused concerns about affordability in the Phoenix market. This is Phoenix's top competitive advantage and drives over 200 new residents to the valley each day. Yet investors remain bullish and the buyer pool continues to expand.
That's right, a lot of new people do move here to Phoenix. In fact, Royden, how many is it per day that move here?
It's over 200 today, to about 245.
Yep, I believe that's what we just saw with the report saying that 89,000 people moved into Phoenix last year in the last 12 months.
And it's been that way for many years, at least 5.
Yep. And that's driving our market and the rents and everything here, helping multifamily investors do very well in our market. In fact, the demand for multifamily has continued to increase from investors, with our sales volume reaching over $2.2 billion in the first quarter of 21, which is well above the national average and above Phoenix's historical average pre-COVID. Arizona and California investors attributed to over 3/4 of the investments that were done in the first quarter of this year. And 8 out-of-state investors are behind the Phoenix's largest deals that are being done. The average price per unit in Phoenix for apartments under 100 units was $170,000, while those over 100 units had an average price per unit of $215,000 a unit. And 1031 exchanges really continue to drive our transaction volume here.
Let's hope the new administration doesn't change that and get rid of the new 1031 exchanges, as they are proposing, with increase in capital gains taxes, increasing it over 100%, which is astounding.
Going from the 20% bracket to up to 43%.
Yeah, it's really amazing.
We've actually had quite a few clients who have been asking us about, what's going to happen with capital gains, and it is an unknown at this point. And so some clients have been choosing to take advantage of a sale and sell this year, while we know the 1031 exchange is still going to be honored, going forward at this point. What we can't predict is 2022 tax law. And so if you are considering a sale, now's a great time. Please meet with us. Now it could be a good time to take a few chips off the table, or do a 1031 exchange into another product.
Yeah, exactly. Well, the Phoenix multifamily market has proven resilient over the past year. The suburbs continue to thrive, and Phoenix's fundamentals continue to improve in urban neighborhoods. While there are still some headwinds, which include affordability and a robust construction pipeline, the outlook for the Phoenix multifamily market continues to look great, and we are full steam ahead.
Yeah, Phoenix continues to be a great place to invest, and just like every great race car, eventually it comes time for a tune-up. So why not reach out to your SBN advisor today for a portfolio checkup? We're here to help you make the best decisions for your investments and maximize your ROI while you hold your multifamily investments. I'm Carrick Sears with SBN Desert Commercial.
I'm Royden Hudnall with SBN.
Thank you for your time. Have a great one.
Appreciate it.